I'm joined today by Hewie Rattray, CEO of Vinanz, the London-listed Bitcoin treasury and mining company. We're going to talk about strategy, operations, and the outlook for digital assets in the public market, and more importantly, the announcement they came out with last night regarding a wrap they're conducting with Winterflood Securities. Hewie, good to see you.
Thank you for having me, Martin.
Great stuff. So talk us through the announcement last night.
Yeah, so we're coming back to the market again via Winterflood's wrap, to raise further capital just in the kind of vanilla equity way. And yeah, it's to kind of proceed with the plan, which is to raise money and buy Bitcoin and stack it on our balance sheet.
Okay, so how much are you looking to raise, and what's the funds going to be used for?
So the headline figure in the wrap is £1 million. I think we will look to go beyond that. And then the funds will minus fees and commissions. We're going to put it just like we did with our last fundraise. We're going to put it all into Bitcoin.
Great stuff, great stuff. Now, you've opted not to increase the debt facility recently. Can you talk us through that decision and what that signals about the capital strategy going forward?
Yeah, so the terms on the second 2 million from our original 4 million institutional investor in the US were slightly more aggressive, and they were kind of collateralized by our Bitcoin holdings. So we opted to not take it, and we opted to kind of reset ourselves, go back to zero debt, and then basically it gives us wider scope to look at better deals right now. I'm a big believer in convertible debt being essential for the future of the company in order for us to scale and aggressively buy Bitcoin. I'm not by any means ruling out further debt. In fact, I think I'm actively looking for further debt offerings and talking to people about further debt offerings. But yeah, that second 2 million, it just didn't sit right with us as a kind of fair deal given where we're at right now.
Okay. Now, Binance is a little bit different because you position yourselves as a Bitcoin treasury and a mining company. How do you balance the sort of volatility of the crypto markets with long-term shareholder value creation?
Yeah, I mean, we have to come into this understanding that there is going to be volatility, and with the asset that we're buying and with the mining industry and stuff like that. We're having some off time in Indiana right now with the mining equipment because of the heat wave over there. But I think Bitcoin's volatility is shrinking now as it kind of matures as an asset class. I think during the tariff war stuff, Bitcoin moved no further either side than the Nasdaq did, right? So, the volatility is probably more in line with the Nasdaq now compared to, it being overly volatile last year and more aggressive on the dips and rips.
Okay. Now, Binance, different. How does Binance then differentiate itself from other listed crypto plays? Then, what makes your business model more attractive to, say, a traditional equity investor?
So I think in comparison to our peers in London and globally, like I think, we are one place that no one else is, and that's the London Stock Exchange, right? We have a huge, huge spectrum of capital offerings that we can do on the LSE. There was $1 trillion raised on the bond market last year in London, and that's just available to the London Stock Exchange companies, right? That's the sidearm of the London Stock Exchange. Um, there's a whole bunch of money around London and around the UK that is only mandated to invest on the London Stock Exchange. So when I think about, how we're different from these companies, we're very much looking to attack that pool of capital that can only really invest in us. So, that's why I say a lot of the time I don't see a lot of our competitors as competition in the traditional way because we're actually going for very different pools of capital. I think the Aquis companies, are very much going for the SIPs and the smaller institutions who invest on Aquis. We're going for a whole different pool of capital, and yeah, that's our main differentiator.
Okay. One thing is always sort of, for me anyway, as an investor looking at this, it's sort of regulation and when regulation comes in. How are you sort of positioning the company to deal with future regulations and, as sentiment evolves?
So yeah, we're kind of aiming to be at the forefront of the discussions when it comes to regulation in the UK, and we're actively reaching out to the regulator and to politicians and decision makers in the industry, or who are speaking on behalf of the industry to see where we can help and see how we can assist. I think it's important, it's both a good story for us to be involved there, and it's just important for us as a company to help, move that forward. So yeah, I want to be actively involved with the discussions, and I'm trying to position the company to be so too.
Well, Huey, thanks for your time and insights today. It's been fascinating talking to you, and I'm looking forward to talking to you again soon.
Thank you, Martin.
Cheers.